Well, welcome to today's educational webcast, Understanding Different Roth Retirement Accounts and Roth Conversion Options. We're going to talk about the basics of Roth IRA, Roth 401k, and then the ideas behind each account and converting, or what we call rollover, of traditional IRAs or Roth. So with that, just some quick disclosure before we get started. All of the discussion today is educational. If you need specific questions answered on tax planning, on your own financial planning, please see your own advisors. So let's get started. What is a Roth IRA? We've certainly heard about these forever. It was a piece of legislation back in the early 90s from a Senator Roth, I believe it was from Delaware. And he put into the code something called a post-tax savings plan, which is a Roth IRA. So all the money that goes in a Roth IRA is after you pay taxes on the contribution. You can have an individual account only, but you can't have an account for you and your spouse, you and your partner. When are they best? You know, a lot of planning goes into this thought process, but I really would suggest anybody is a good candidate for Roth. But more than ever, I think people are thinking about Roth IRAs when they're going to retire because they feel their marginal taxes may be going up. And I think that's a fair estimation. You know, we're at a very low income tax rate now in the country, and likely they probably will increase. So you think it's reasonable to think your tax rates go up when you retire. I believe that's a good qualified planning method. Single filers can put money in a Roth if their adjusted gross income is less than $144,000. Married, less than $214,000. I know you look at this and say, here we go again with the IRS. They have limits. They do have limits as to funding an individual Roth IRA. So with that in mind, don't despair though. There is an opportunity to fund an individual Roth IRA with what's called, and I'm putting in quotes, a backdoor Roth IRA. If your adjusted gross income is in excess of the 214, say as a joint filer, you really like the idea of doing this, you could do a backdoor Roth IRA, which means you open a traditional IRA and then convert it to a Roth. The code does allow you to do that. So I would suggest you talk to your own CPA or advisor with that option in mind. Contribution limit this year is $6,000 per person for the Roth IRA and another $1,000 if you're over age 50. So remember the two basics of the Roth though. You have to have it at least 5 years as an opened account, and you must be at least age 59 and a half to take distributions on a tax-free basis. Distributions from a Roth are on the gains tax-free, which is an important element to keep in mind. So next, let's take a look at some of the benefits. Mostly outweigh the drawbacks, but you know, understanding the big benefit, or some of them are no required minimum distributions. You may recall in a 401k or a regular IRA, you have to take money out at age 72. You never have to take a distribution out of the Roth IRA. Very important distinction, because a lot of people say, well, I don't want to necessarily take money out of all my retirement accounts when I hit certain ages. I'd rather take fewer dollars out of certain accounts and maybe more out of others. So the Roth does not have an age limit to when you start taking withdrawals. Easy withdrawals, meaning you can take out any amount you'd like. And all of the gains, again, as long as you hold the account 5 years, you're over 59 and a half, are tax-free. Spousal Roth means maybe you have a non-working spouse and you're trying to get some accounts started for that individual. You can open up a Roth IRA for a non-working spouse as long as one of the other spouses is working. That's a great way to fund, you know, a retirement account. Flexible timing, meaning, you know, you can start this. I have suggested all my kids start this right now. My kids are 27 and 25. So get started on this now. A great time to do it. But if you put it off, no time like the present, right? Extra time to contribute. That's what that's saying, is maybe you retire, but you still contribute to the Roth. Why would you do that? We'll cover it One of the big items coming up a lot lately is it's a way to put a side fund together for long-term care, in the Roth IRA. So people keep contributing after they may quote unquote retire or work at something different. Tax-free distributions, we covered. Anything on the gains is tax-free. No age limit to open. Some of the drawbacks, I guess you could call it that. You got to wait 5 years to withdraw earnings. It's post-tax, so no write-off. You have that crazy Roth IRA limit of adjusted gross income, but I mentioned there is a workaround called that quote unquote backdoor Roth, and there are limits on the contributions. So let's take a look at another idea, which is in your 401k. You can, in fact, do a Roth 401k, but it doesn't add to your traditional 401k. It combines the two, meaning right now, the limit in 2022 is $20,500 you can put in traditional 401k and another $6,500 if you're over 50. So that's a total of $27,000. You can't also put an additional $27,000 in the Roth 401k. It's either or you could combine the two. People are doing that. They're combining somewhat. So maybe you want to put 10 grand in the traditional to get a write-off. You need some tax planning. And you're over age 50, you put 17 grand in the Roth 401k. The other aspect of this is you can, in fact, also contribute to the individual Roth IRA if you qualify, in addition to the Roth 401k. So in theory, you could put in, if you're over 50, 27,000 in Roth K and another 7,000 Roth IRA, so a total of 34,000. That's certainly a way to jumpstart your Roth account. But the footnote to all this is inside your 401k, a lot of people still need that tax write-off. So you're kind of balancing, between the Roth 401k and the traditional. You can, again, fund the plan, Roth 401k at work. Interestingly, I mentioned there's an income limit to funding an individual Roth. There's no income limit on the Roth 401k. I know, don't shoot the messenger. I don't make the IRS rules. Does not make sense. But that's a distinction. Penalties, if you take it out of the Roth 401k, similar to the Roth IRA, you got to be 59 and a half, 5 years. You do have to take minimum distributions out of a Roth 401k, but the way in which you overcome that tax-wise is if you leave your job or you have an enforced rollover option, you can take the Roth 401k money, roll it into an outside individual Roth IRA, and then there's no minimum age for distribution. So a lot to think about, which is why I recommend it up front. Talk to your CPA, talk to your own planner or advisor. But I'm a big proponent of the Roth, whether it's IRA or 401k. So next, let's take a look at some of the more benefits. Again, the Roth 401k versus the Roth IRA. They all have similarities, right? They're all post-tax money, both of them. But as I mentioned, inside a 401k, the Roth can be the same contribution as traditional 401k, but you can't put in both. You can't quote unquote double dip. You can only do one or the other or a combination. All the dollars will come out of the Roth K tax-free on the earnings, just like the Roth IRA. So how they compare? Some real similarities. Contribution limits are different, right? The Roth IRA, I'm assuming over 50, you do 7,000. Roth 401k, you could actually do 27,000. Distributions are similar. As long as the Roth 401k gets converted to a Roth IRA, you don't have an age 72 limit. You do get matching on your Roth 401k generally. You don't get that obviously in the Roth IRA. Investment options, you may have more choices with the Roth IRA if you have a brokerage account versus inside the 401k. We mentioned the income limits. There is an income limitation on the Roth IRA, but there is not one on the Roth 401k. And then the rules for early withdrawals we talked about. Got to be careful. When you set up the Roth IRA or the Roth 401k, pay attention to that 5-year rule or age 59 and a half. There is a college distribution provision in the Roth IRA, but I'm going to leave that for kind of another educational webcast because it's a whole different set of rules. So let's dig a little bit into the conversion idea. It's coming up more, I think, and when there's a little bit of a stock market slowdown and people are seeing a little reduced value in their accounts, and they're thinking, hey, maybe this is a good time to think about conversion. So what does a conversion mean? If you in fact have 100,000, let's take your company 401k. You really like this idea of the Roth. You're willing to kind of pay the taxes up front because that's what you have to do. So take your 100,000 in your company sponsored 401k. You're going to convert it internally. So in this case, a Principal Financial Group, you're going to convert the 100,000 internally from the traditional 401k to the Roth 401k. You're going to have another line item in your Principal Financial Statement. It'll say Roth 401k, and it'll be the whole number of conversion, 100,000. However, at the end of the year, Principal Financial will send you a 1099, give you you have to pay taxes on the 100,000. Let's assume you pay 25% tax at federal and state. So you have to come up with the cash to pay the tax. You might say, why would I do that? I mean, it doesn't make any sense. Well, again, you're anticipating because your age or your own planning that you'd rather have a Roth 401k account coupled with a traditional 401k or a traditional IRA, because you like the idea, as long as you can wait the 5 years, as long as you can get yourself to 59 and a half, you will be able to take all the gains out of the Roth tax-free, and you don't have a minimum age to take the money out. Check on number 5 with your retirement custodian. I don't believe Principal Financial Group will pay the taxes out of your converted amount, but double check with them. So let's keep the discussion going here in terms of some hypotheticals we ran. Because people always want to know, well, if I convert the money inside maybe my IRA to a Roth IRA, or I convert the money inside my 401k to a Roth 401k, how does this kind of look potentially? So here's the 40-year-old who did the 100,000 conversion. And then the green line shows the growth of the 100,000 for the next 32 years. We assume 6%, which is totally hypothetical, but I think that's reasonable over a long period of time. The blue line is assuming that the individual also put money in a Roth IRA after they converted. So they added money to their Roth IRA savings. So between the two, the Roth IRA and the converted amount, they grew to almost $1.3 million for the 40-year-old. So that's real money because, again, remember, whatever the contributions were, so the initial 100,000 conversion, the 215 new money IRA, so about 315,000 grew almost by $1 million. That entire gain will come out of the Roth tax-free. So very powerful. So looking at the next couple slides, we're just looking at different ages. Here's the 45-year-old, little less time to get to 72. And again, you might ask, well, Dave, why are you using 72? 72, again, is the age that you have to take money out of a traditional IRA or traditional 401k, but you don't have to do that with a Roth. So just kind of planning wise, keeping that age in mind. So this example, 45 to 72, 27 years of saving. In the Roth, converted the 100,000, saved 185 in the Roth, it grew. So between the two, you put in 285, call it 300,000, it grew up to 900,000. So a 600,000 gain. So the numbers do make sense. You again have to understand the tax issues when you do conversion, and the fact when you do a Roth IRA or Roth 401k, it's post-tax. But I think what you're doing here is planning for distribution on the other end when you retire. So the next overhead is just somebody older, 50. Same discussion, right? You're 50, put in money to the Roth over the next 22 years, converted 100,000. What happened between the two? You converted 100, you put in 154, 254, it grew to 685, not bad, $430,000 gain. So, the numbers do make sense. Again, you just have to understand the dynamics of post-tax in the Roth versus pre-tax and traditional 401k. So let's kind of pull it together in terms of discussion. When should you think about Roth conversion? Maybe you have been a good cash saver. You've got cash in the bank. Obviously, it's earning nothing. You understand this idea of conversion. You have to pay the tax up front. And this isn't going to push you into a different tax bracket when you do this. We talked about the third bullet a little bit. You could substitute your existing 401k for IRA, has suffered recent losses. Why do you think about conversion then? Because your values are down lower. So obviously the taxes you pay on the conversion will be lower. And you're anticipating the market won't stay down forever. So you will make up those quote unquote tax losses you had to pay for the conversion. You're in a lower bracket now. We talked a lot about this when Biden first took over as president. Everybody thought, myself included, he pushed through a bill in Congress that changed the tax tables, essentially making them a lot higher than they are right now. I would suggest that at some point that will happen. Biden did not get away with that, but I think it's a reasonable assumption. They are going to go up the interest rates to pay, obviously, for a lot of the pandemic bailout and the rest of those issues. Maybe you have more itemized deductions than usual. You earn too much to contribute to a regular Roth IRA. And again, there's no limit on your income to do conversions. I'm giving you a lot of different aspects here. Future brackets will go up, which I think they will. And the 401k is not your only source of money. You have other savings. So with all that discussion, the one last area to cover for Roth is estate plan. There is a good reason to think about Roth planning, whether IRA or Roth 401k, that those dollars are left to heirs or beneficiaries tax-free. In most cases, heirs that get a Roth IRA have to, at a minimum, do the payout over 10 years. If it's a direct spouse, they in fact could never take distribution from the Roth if they didn't want to. Last bullet, some ideas are coming out here. The Roth IRA, long-term care insurance, if anybody's ever looked at that for themselves, is expensive, but we all know it's necessary in some form. So maybe think about the Roth IRA or the Roth 401k or a converted Roth as a form of long-term care money for you in later years. Maybe you never use it. And even more reason for the Roth, because you'll be able to invest it and leave it for beneficiaries. So all of this said, a lot of discussion for you to think about. But I think all in all, the idea behind Roth is very fundamental financial planning one, and a very good idea to consider the new Roth IRA funding, the new Roth 401k funding, and think about doing Roth conversions. I thank you all as an audience, and we'll talk to you soon.